Good afternoon, everyone. This is Trader Tim from eMiniMind.com. Today is Monday, February 6, 2017, and markets have just closed. I want to talk about what we can expect for the week ahead, recap some of the trades that we've been seeing, and kind of give us a picture for the upcoming month or so. This week in the markets, we've got the international trade tomorrow, jobless claims Thursday, consumer sentiment Friday. So a few numbers that could certainly move the market. We've seen President Trump make some announcements at various times of the day that have moved the markets. We also have earnings announcements that have been catalysts for moving the market. If we look at the most recent pullback to the 2262.25s, that's going to target above us at 2312s. And today's little inside day is continuing that bullish trend. Pulling back, you'll notice that when we touched 2262s the very first time, we had a very strong reaction off that level. The next day, we touched it again, same thing, strong reaction. The very next day, the market tried to push down, and the bulls once again brought the market back up. So the bulls are definitely following through, if you will. And going forward into this week, I'd look for that breakout of 2296.50s, the trading hours only high of the E-mini S&P. And if we get that break, then it's potentially a strong move, a big body candle that could take us to 2300, being a big round number, and through that 2312's just above us. So we're not that far away where it could happen in one move. It could be some sort of a gap up situation. If we do get a gap up, if we're gapping up into new highs, then that could be a good opportunity to get long at the open. And as we talk about in the Tuesday trading room, using that first 5-minute bar as a gauge to get into a trade right off the open is a great way to take advantage of that. Just gapping up at highs is not a very good reward to risk opportunity to get in to a long trade, because typically if we've moved up for a while and then all of a sudden we're gapping up, not only has the market moved already, but now we're gapping up, and that's when we typically get that failure or that gap and crap, if you will, where the market gaps up, maybe makes a double top, and then gets a big sell-off. But in this case, if we're gapping up to new highs, you get a lot of traders coming in, chasing the markets, other traders that might be on the sidelines feeling like they're left out. The bulls have shown us that there is follow through. Every time we've pulled back, the market has had these nice long tails, and the bulls push the markets back up. So that's kind of the bigger picture. And the intraday picture, we've had some really nice 512 retracements that we've seen all throughout the week. Even though volatility is really, really low, if we take today for an example, the line here on the left is the market open. This is the 512 tick chart with the Heikin-Ashi candlestick study, or the Heikin-Ashi candlestick formation on the chart. And if we let the first 15 minutes settle out, then we can take from lows to highs of the morning, and the market came back to a great 50% retracement at 2288.50s. Placing your order one tick in front of that ensures that, as the market trades through your price, that then you get filled, and then ran up close to the target, didn't make it all the way there. If you didn't take the full low to high, let's say you use the next anchor up, low to high, still placing your order one tick in front of the 50%, just rounding up. You can kind of split the difference sometimes if you're not sure if you're using the correct anchor, if you want to use that phrase correct. But you can just kind of draw both of them up and split the difference. And either way, you're going to get into the trade and then take it up again close to the target. Didn't make it all the way there, but when the market breaks out of the swing high, if you start trailing your stop under each candle, then at least you can lock in a few points of profit before the market rolled over. After that, the market rolled over, broke the swing low, so we can start drawing setups in the opposite direction from high. Come on, grab me my anchor point. Down to lows, and same thing, market rallied up into the 50 and then came down close to the target, didn't get all the way there. But again, trailing your stop kind of allows you to take at least a little bit of profit, even if the market doesn't make it all the way to the target. Just stepping back and looking at today, the market was pretty choppy. Just looking at the daily chart, we didn't really go anywhere from open to close. So to have two trades that, more small winners on a day where the market was a really tight range of 8 points and pretty sideways, that those two trades basically took us all the way to the hour and a half mark into the NYSE Open. So there's good trading to be had both on the intraday time frame and the swing trading time frame. If we quickly move over to some of the bigger names, we can kind of get a picture of what the individual stocks are looking like, and we can compare that to the broader market. So if we start with the S&P, we can see pretty even volume on this very sideways move here, a leg up, a move sideways, and then now we're sort of putting in that higher low and potentially breaking out. Dow, almost identical chart setup. The NASDAQ looking really good as well. A nice higher low put in, very close to breaking out of highs. The Russell, not nearly as strong, a very large bull flag, if you will. And but again, not too far off from highs. If we look at some individual names like Google, we see the opposite, a bear flag in Google, big selling volume and a potential next move lower. So one thing to consider is if you are putting on individual swing trades, it's okay if we're in an uptrend to have shorts. And a market like Google looking to short below lows on this bear flag, on a day when the market's up, you may not get a very big sell-off on Google, but just rising tide lifts all ships. As soon as the market starts to sell off, then Google should see a bigger sell-off. So the stocks that are trending inversely to the market or trending down as the broader market's trending up, they may still go down as the broader market goes up, but when the market has a pullback day in that uptrend, those stocks that are bearish are really going to see some selling pressure. Next, Amazon, sort of the same thing, and not really a bear flag, but certainly broke its uptrend. Another one, Netflix. Netflix has been looking good relative to the market, the same sort of nice, stiff uptrend. Other stocks, Best Buy, kind of in the middle. Best Buy, FedEx, these are stocks that saw big run-ups at the holiday season and have kind of fell off. Home Depot, Apple is looking really good. So kind of a mixed bag on some of the bigger names. If we look at Microsoft, kind of that same thing as Google, it's sort of a bear flag in the picture. So while we've got potential here to break out of highs, some of the bigger stocks that are more heavily traded are not necessarily lining up all in the same fashion. If we had a nice series of higher highs and higher lows and all these individual stocks were setting up in hammer formations, then that's when you see a gap up the following day, market breaks the high, the low bar, you can get in on that gap up and then ride that into new highs. So kind of a mixed bag up here, but we've got some lines in the sand. The high, 2296.50, the low, the swing low down here, which also happens to be the 50% retracement, 22.6225s. And if we were to come down and break that, then the trend would certainly be broken. And even if we were to just draw a nice little trend line like so, we can see a move back down to the 50. While it could form a double bottom, it would certainly break the uptrend line that we're starting to form. So keep your eyes out this week. Keep that caution radar, that red flag up, just because sometimes when the VIX does get super low, that's a potential that it can't stay this low forever. So while we're getting close to highs, if we break highs, that's one thing. If we come close to highs and don't break them, it's a completely different market environment. So we'll be doing a trading session tomorrow morning, Tuesday. You can check that out, emoneymind.com/VIP. Feel free to shoot me an email with any questions you have, tim@emoneymind.com. Thanks. Have a great weekend. Have a great week, rather.